Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the stock market, some of the leading indicators, as well as the Magnificent Seven stocks. I know most of you subscribe to my channel are here for crypto, but the stock market does sort of front run what crypto does. So crypto, some people call it digital gold. Some people describe it as a speculative tech asset. So if things in the stock market are going really well, crypto tends to do well during that time as well. So let's get started with fear and greed and CNN. Falling down into lower greed area towards neutral. A couple things I wanted to bring up just with prior charts that we've talked about here. One is the presidential pump and inauguration dump. So after the election, markets do tend to run up, and they tend to run up anyways. We have the Santa Claus rally. Q4 tends to be pretty good. I saw a statistic chart that showed that the most bullish time of the year for stocks is from it's either October to March or November to April, but in that time frame, things tend to do well. But on average, when we have the inauguration, there's a little bit of chop down and sideways. So just something to keep in the back of your mind if quarter one or two aren't great next year. Again, it's just an average. Things can tend to be broken. The Fed is going to be meeting about rate cuts soon, and there's been these two green lines. You can see we're definitely following the dark green line. We even had that 10% correction before with the end carry trade. But when the Fed is cutting and there's no recession in the immediate future, this is pretty bullish for markets. But something to keep in mind is that when the Fed is cutting large and fast, that tends to mean that something is broken in the market. So even though the Fed first cut rates by 50, don't focus on the number, focus on the average. They cut by 50 in September, but then they cut by 25 2 months later in November. They didn't cut in October. So we've had an average of 25 basis points. So I think we're following more of a 1998 style scenario right now. Doesn't mean there isn't trouble on the horizon, maybe a couple of years down the road, but not immediately. Something I started talking about on this channel was just the overall state of the market. Is now a good time to buy? I'd say now is a very risky time to buy. And if you're buying anything for long term, the way I think about it is this. Is the stock going to be around in 10 to 20 years? Is a product I like, product I use? Have I researched it enough? Can equally weigh the goods and the bads without bias? And if so, when they hit my levels, whether moving averages, fibs, I'll get into those indicators on the charts, I feel comfortable buying into them, but I'm not going to be buying those stocks at a premium, even though I love them. As far as crypto, of course, subscribe if you want to hear crypto content, but crypto, we are still up into high greed, extreme greed, in fact. And so do videos on crypto, mining stocks, altcoins. We talk about the Bitcoin rainbow chart and the cyclical pattern of crypto. And yes, guys, a lot of people talk about their predictions, where they think crypto is going, what price. And it feels good to hear someone say a price that you like or agree with. But I'll tell you right now, predictions don't matter. Your strategy and how to make money does. So I try to emphasize having a plan, using emotion as an indicator, not a decision maker, and having a strategy that does well despite whether or not your predictions come true. So predictions, while they're nice, you want to have a strategy that supersedes that. So I can't stress that enough. Anyways, let's get into the stock market. And you can see ever since we came over this trend line here that it's been moving on up. And the next point or parallel trend line here, if we were to stay on this trajectory, somewhere in the mid 6,000s. Now you may be asking about this giant blue channel and what does this mean? Well, if we zoom out, ever since the great financial crisis, you can see the bottom here from the GFC and the tops that the stock market's been in this parallel channel. Yes, it got underneath it for COVID when it crashed, but you see the candle body sort of rested right on there. So in bullish scenarios, I'm looking for that mid 6,000 range. If we really get stupid bullish, somewhere around the 7,000 area, as crazy as that is to believe. Let's go into the VIX. This is the volatility index. Low volatility. We were moving on up, and then the volatility seems to crash. So times are good, low volatility. Yay, wonderful. Let's get into the percent of stocks above the 200-day moving average. This can sort of be a leading indicator on whether or not things are too bullish or too bearish. So when this when the average tends to get above 70 or higher, that's like extremely bullish. You want to be cautious. But when the average gets down here under these moving averages, 50s, 60s or lower, sometimes you can look for good deals. So right now, still elevated. Something to keep in the back of your mind just on the horizon, that's the yield curve inversion. So the best way I could try to explain this in simple terms, and it's way more complex than this, is when we have low rates, the yield curve is high, and we're weighing the 10-year against the 2-year. When the Fed is raising rates, the yield curve becomes uninverted, and as they've been cutting rates, the yield curve becomes inverted, sorry, and then as they start cutting rates, it becomes uninverted again. So yeah, inverted, uninverted. But as you can see, right now it's been coming down a little bit, but when it has these large bullish moves up, recessions tend to be after. So these red vertical lines I put on here, this is just the plot market bottoms, and as you can see, big inversion here, market bottom about a year and a half after, big inversion, this is 2008, market bottom about 2 years after, the COVID, of course. This was a really big inversion. So the uninversion, it would map us out sometime, I don't know, mid later 26, 27. The thing that has me more cautious about this one is the length and the depth of uninversion, that maybe the upcoming recession is going to be a tough one, possibly seeing 40 to 50% corrections in the S&P, as crazy as that sounds. But again, where are we correcting from? Are we correcting from 6,000, 7,500? Who knows? But maybe the dip or the bottom is further out because this was deeper. Just something I think about. Unemployment data, probably heard something about that being in the news. People right now, the sentiment is if unemployment's between 4.2, 4.1, then that's neutral. Higher than 4.2, like 4.3, then the markets will react negatively. Or if it goes down, obviously that's going to really turn on the heaters. So right now, that's been the unemployment news recently. You guys do see I have the buy sell signal indicator on for stocks is 1020 MA crossover. You can see there was a sell signal, so maybe it's going to go down again. It doesn't matter just what the data is going to say. If it does come back up to the 50-week moving average, that'd be around that 4.3 area. So we'll see, but people believe that's going to cause the markets to go one way or the other. Let's go into Bitcoin briefly. So you can see Bitcoin, we hit 100K. Yay, congrats. This 1618 line, this is the macro fib, so the Fibonacci retracement. And guys, I try to use indicators and tools that you can use and simply understand. So I have on the moving averages, I have on the buy sell signals. Sometimes I get into the RSIs. But you draw your macro fib from high to low, and when you're looking at price extensions, you take your fib off log, even though we're on log scale here, and you can see the 1618 is at 102K. So I know we are above that, and so you might be sitting there saying, well, you're wrong. You said 102K, it's at 103K, my God. But you can see it's just a wick right now. I want to see on the macro, the weekly, the candle bodies closing above that. So right now, if we just keep candle bodies run underneath it with wicks forming a ceiling, you can possibly start to become a little bit suspicious. So just keep that in the back of your mind. We want to see this start closing above, not having these little wicks on the weekly, but actually closing above. The next target, the 2618, would be 155K. And then the 3618 is about 208K. So in the most bullish topping scenario, that'd be the area I'd be looking for. Let's get over into the Magnificent 7 stocks. First, NVIDIA. So again, there's different ways to draw fibs. You can draw from low to high, which I did here, high to low. NVIDIA made a high recently. Let's go over to the daily. Let's get this as correct as we can. See how well I can draw it. Okay, actually tagged it pretty close. But after that wick, had a sell signal on the daily. On the daily moving average, and again, moving averages change by time frame. So if we're on the daily, we're clicking the 1 year guy down here, 1 year and 1 day. If we're on the weekly, the moving averages will be different because we're on a weekly moving average, not daily. Okay. Anyways, NVIDIA came down to the 50. Got a nice bounce buy signal going back up. So it looks like it may want to re-challenge those all-time highs at about 152. It has a $3.5 trillion. So if things get mega bullish, S&P going into this high 6,000s. Maybe you see Nvidia getting up to 200. Microsoft, let's see here. So Microsoft on the daily, we were talking about back here how this tends to be pretty good value historically. Dollar cost average value for Microsoft if you love it. And man, it got a nice bounce under there. So the 200-day moving average, the 50-week moving average, whenever it's at or below, deep, deep value if you're just dollar cost averaging. Yes, you can wait for buy signals. If you really want to, hedge against risk, if you will. But you see Microsoft just loves that 50, doesn't get underneath it too long, but that's where super deep value is. And I'd say discounts start over here. Apple, right now, look at that. It was treating the 1618 as support. Look at that nice support. Not only the 1618, but these moving averages as well. It's been building higher lows here, the 1618 at about 220, and it's rocketing on up. So where's the 2618, you might ask? That's at 279, 280. So that's going to be the next profit-taking area for Apple. Amazon here finally getting towards its 1618. So it was battling this former all-time high way back in, 2021. You can see how many times it tested it, faked out, tested it. It's moving on up. So Amazon finally looking bullish, and the next target, the 1618 for Amazon, is 255. For Google, what do we got here for Google? You can see it tested the 1618, came down to the former all-time high, had a lower high, and then bounced off these moving averages. So you can see this is wedging up here. I'll show you guys what I mean by that. So anytime you get some of these wedges, you can see that there could be big moves in the near future. So we'll see if it coils up in here. I'm trying to decide whether or not, I don't think that's a parallel channel quite. I don't know. Sometimes you see things on the chart and you're like, maybe let's map this out. So I'm just seeing here sort of a parallel channel, not quite. Just wanted to draw it out. And that's what charting is, guys. Draw things out, see if it works, makes sense. If it doesn't, then move on. But higher lows, lower highs, as it gets coiled in here, look for a big move. So 1618, 193. If Google got stupid bullish, 2618, 261. Let's go to Meta. And Meta, man, we were talking about this one, how it's just been so bullish. And when you take a look at the weekly, you can see here that the 20-week moving average is just holding so strong. Came down to the 20-week moving average, candle body close at the 1618, has a nice big candle on the Heikin-Ashi buy signal as well. And the next area for Meta, 863. So if Meta is getting up in the 800s and you have bought down here in the dip of 22, some good profit taking area probably. And then lastly, let's finish up with Tesla. Let's see how Tesla is doing. We had this giant wedge pattern, and Tesla had a little bit of a fake out, came down, was forming this channel. Okay, when it broke out of that wedge pattern for real, this downward trend line here came up, down to it, big buy signal that's just been going up. So it's still in this channel. Let's extend this out a little bit. It is wicking above, getting ready to turn stupid bullish. That's a technical term. But if so, the former all-time high for Tesla around 410, 412, and the 1618 for Tesla, if it was to get really ridiculous, and we'll take this fib, we'll put it off log, the 1618, if we get above all-time highs for Tesla, would be around 600. So 600 for an electric automotive company, man, that'd be a lot. So not quite a 2x, but you'd be saying somewhere closer to $2 trillion. Crazy to think about, but something I try to remind myself of is with inflation, the values of these stocks are only going to go up. So the value of our dollar is less. And so even though these stocks are going up, I think they have to catch up with whatever their inflation adjusted value is as well. So try to keep that in the back of your mind, even though some price targets can seem unbelievable. And yes, we have to factor in market cap. It's a real thing you can't ignore. We also have to factor in inflation, how organically prices are going to go up because of inflation, because our dollars are just worth less. And so you're going to have more money, so to say, to map out how much these stocks are worth. So anyways, guys, thank you so much for watching. I'll try to do a live stream tomorrow. Appreciate all of you and have a wonderful Thursday. Take care.